The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, I'm doing great. You know, I am addicted to TFNN.
We appreciate you growling and prowling with us out here. It's a great network, man. And I want to thank everyone out there, for making it a great network.
Well, it's great because I do outside sales, so I get to have the station on my phone the whole day. And when I go pick up the kids from school at 3 o'clock, they all love it and giving the old row. Educating the kids at a young age is a good thing.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, folks, and a great week. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We have the Dow Industrials up 37. NASDAQ is flat. S&Ps are up 250. Gold contract down $2, trading at $1,219 an ounce. Silver flat at $15.20 an ounce. Platinum also flat at $9.45 an ounce. Copper up a penny at $2.24 a pound. Light sweet crude flat at $39.39. Everything's flat, folks. Europe's closed. Bonds, a 10-year note up 3 ticks, 129.10. 30-year up 9 ticks, 163.10. Good old King Dollar. King Dollar down 208 ticks at 95.96. The euro is up 32 at 112, and the yen is trading up 24 at 113.32. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have out here? Okay, this is going to be one of the lowest volume days of the year. Thus far, we've done 41 million shares on the NYSE. On the SPY. The SPY is trading at 203.55. Bottom line, SPY wants to trade up to this 211 price area, finish off this ABC structure inside the cash S&P. Right now, with the cash S&P, folks, we're at 2,036, 2,087 is that price projection. Volume-wise, inside the market in general today, you talk about anemic, we got it. We're at 410 million right now. That's going to shoot out maybe about 600 million, 650 on the NYSE. On the NASDAQ Composite, we're at 1 billion. That'll do about 1.3, 1.4. What is intriguing, there's no doubt that with Europe being closed, that slows down our market, and it slows down pretty dramatically. Gold contract, what do we have with gold? Gold contract today, trading the price point from 1206 to 1219. You've done 131,000 contracts. That is coming into 366,000. So you got to, you didn't quite make it down to where it broke out from, which is 1196. We made it to 1206, rejected it. It's back inside the downdraft that was created out here on the 23rd, and that's saying, guess what? Now you're going to run to the top of this consolidation that we've been in since the February 11th updraft, where gold went from 1196 to 1263. Now we'll make the run to 1287. Silver, what do we have with the silver market? Silver still needs to catch a bid. Silver out here is at 1520. Bottom line, 26,000 contracts, and silver came down last Wednesday, had some juice behind the move lower. We went from 1593 to 1523. Did it with 76,000 contracts. We tested that. We got to Thursday. We got to a low and rejected it. But silver's got to get back inside the 1523 area, and right now you're only at 1520. The notes, we take a look at the notes out here, and what you're going to see with the notes have been basically flat all day. The 10-year note right now is trading up 3 ticks. We've traded from 128.31 to 129.15. We've been plus or minus 6 just about all day. That being said, what you actually did is that it pushed into the last swing highs that were generated out here since March 17th. And it did it with lighter volume, and it's really going to be a key as to where this closes out right now. And the close, if we're at 129.10, if we close under the 129.11, that would basically be a decent failure on price and on volume. We take a look at the good old King Dollar. What you have with King Dollar is this, folks. King Dollar right now went up last week, dramatically lighter volume, gave it up in spades out here today. What I expect you're going to see is that you are going to see big numbers on King Dollar on the way down tomorrow. Right now we're at 95.96. 94.60 was the last swing low that was generated out here on the March 18th. And what it looks like it's done is this. It looks like that it has taken, there's going to be one ABC structure inside a much larger one that wants to bring King Dollar down into the 92.50 area, which is the swing low that was established on the 24th of August. Our phone number is 877-927-6648. Inside the Dow Industrials, the strength versus the weakness. This is what you have. The strength is GE. Moving to South Boston, Massachusetts. Gotta love it. GE's up 47 cents. That's where they're moving their headquarters, by the way, folks. That's up 47 cents, $31.58. 3M is up $2, trading out at $166.50. You get Disney up 96 cents at 98.18, and Travelers Insurance is up 91 at 116.30. Taken away from the Dow, Microsoft is down 72 cents at 53.48. Pfizer is down 31 at 29.76. Boeing is off 50 cents at 131.62, and Costco is down 10 cents at $27.86. Inside the NDX 100, strength versus the weakness. The strength out here is Marriott. Marriott is up 276. What you have with Marriott, folks, Marriott is in a bidding war about Starwood Hotels, and they're with the bidding war is with Anbang, which is an insurance company from China. This morning, Starwood received a higher offer, $14 billion from the China group. Bottom line is that I expect what you're more than likely going to see is that Anbang is the one that's more than likely going to be able to take that over. The reason being is that each and every time they come back with the bid is absolutely a much larger cash bid. That's what it comes down to. Dollar Tree. Dollar Tree is the next mover inside the NDX 100. That's up $2.62 at 81.14. Netflix is up $2.83 at 101.19. Gilead is up $1.75 at 93.05. Taken away from it on the way down, you have Endo International down 95 cents at 28.62. NetEase is down 4.48. You have JD.com down 62, and CSX is off 61. You stay right there, folks. We're coming right back. Dow Industrials right now are up 41. Nasdaq's up 2. S&Ps are up 250. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go over and take a look at the oil contract. So oil out here, folks, trading out at a price point of $39.41. If we take a look at the type of move we've had is this. Okay, so your bottom came in on January 20th. And this contract here, that bottom was laid out at $29.85. Your first expansion topside went from $29.85 up to $37. That was from January 20th area up to the January 28th. Then what does it do? Backs right back down into $30.67. That was on February 11th. And from February 11th on, it went topside in a big way. So February 11th with $30.67. We get up to 42, which is about, what, a 33% move. At that level up there, it has volume. You know, so this little baby, number one, wants to at least test the $42.49. The way that it's actually set up, I suspect it very well may be a small ABC structure on the way up. You know, what you have is that we got down last Thursday to 38.33. That was 495,000 contracts against 443, with the high up there is 467. It looks to me like this oil contract just wants to run up to this $46 level. Now, that bottom line also can be just a dead cat bounce. You know, because if we take a look at this contract and we put this on a much larger basis, what you're going to see is this. It's pretty cool how this thing shakes out. So if I put this on a continuous contract, I'm going to put it back 5 years. What you're going to see, this is a one-way move, man. I mean, oil was trading out June of 2014, so almost 2 years. That was at 107. In fact, let me put this on 3 years so we can look at this a little bit better. Okay, so your first leg down took it from 107 in June, so almost 2 years ago, to a price point of 43. That was the devastation. That's the largest part of the devastation, I'd say. Then you bounced around. You went from $45 June of 2014. You got back up to 61 of June of 15. Then what ends up happening? Boom. Falls out of bed once again. Goes from a price point in June of 2015 of 61, gets cut in half and goes out of 26. Now, that area there, if we take this and we say, okay, what is a dead cat bounce out of that area. Whoops, not that one, this one. Well, actually, you know, it's going to be pretty cool because if oil gets to the 46 area, where I think it will, that's going to be between a 0.50 and a 0.618 retracement. You know, so that's bottom. That's saying, hey, it can get up into after a pullback. Let's say you get a 46, you get a pullback down to 40 again. That's saying it can make it up to $60. So that's going to be intriguing watching that play out. If we go over to the XLE, we look at some of these equities out here. XLE, this is looking for higher price. The XLE is still looking for the November 7th swing high, November 3rd swing high, rather. That November 3rd swing high is $71.93. Right now, you're at $61.46. If we go take a look at Exxon, Exxon is laying right underneath that high. It's up 12 cents today. We're at $84.10. The low of the high is 85. The high is 87. Chevron, I believe that already whacked that last week. Chevron is at 94.60, and 95.42 is the high. 95.42 is the low of the high. 98 is the high. And Chevron also wants higher price. When it actually went up there on March 18th, it had the volume once again. You know, March 18th we did 14 million shares. So Chevron not only wants to get there, it will be a mind blower, folks, is if it actually broke above that area. Because if you did break above that area, that would be saying that the oil market's really going to take off. Because if Chevron had a clean break above the $98 level, it'd be game. That's a 110. That 110 would be pretty quickly. Financials. Let's go over to the financials. The XLF. XLF out here is up 12 cents. You're at 22.42. And this one's higher price too. You know, the financials look like they want to go up to 23.30. 23.30 would end up being the lows of December 18th. If we go take a look at JP Morgan Chase, that's set up the same way too. Yeah, JP Morgan, these financials came in with some strength last week, folks, on March 18th. March 18th was pretty decent. So JP Morgan goes topside with 29 million shares, back down on last Thursday with 12 million to doing 8 million right now, just a sideways move. That's building cause to get up into this gap. And the gap on JP Morgan from December 31st to January 4th level is at $66, and right now you're at $59.56. So that's going to get, you know, you start putting these oils together, you start putting the financials together. That's saying that somehow, some way, this S&P is going to get sucked all the way back up to the top. And if we do go over to the cash S&P for a second and take a look at it, what you're going to see is this, is that the 2087 level, you have a swing point from January, which is 2081. 2087 is your price projection. And the last time that we were up here, folks, okay, we stayed here on a weekly basis from February 20th until August 20th. So March, April, May, June, July, August. March, April, May, June, July. 6 full months. 6 full months we stayed at that high. You know, you'll see all little bars up there on a weekly basis. So it's pretty intense. You know, getting up there, meaning you're going to make it and or you're going to break it. What I expect we're going to see there, because of the way that we've powered up here, you know, the first move coming off that bottom was very fast. This move, it's struggling somewhat. I expect it to not only get there, I expect that more than likely it's going to be some kind of a spike high. The reason I'm saying that is that it's too easy, and the market's never that easy, that it's only going to do an ABC price projection, get to that projection, and then give it up. It just doesn't work like that. What you're going to be able to do, which is pretty cool, though, is you can put the XAU together, that means the XLE with it. The XLF with it, and turn around and put those bonds with it. You know, those correlations will be pretty cool. And of course, then we run over to King Dollar, because what you do have happening out here, I think King Dollar once again is going to be the mover, and it's real possible. You know, it looks to me like tomorrow King Dollar wants to go to lower price. As King Dollar does get into lower price, more than likely what I suspect you're going to see is that the market's going to move into higher price. Some of the Dow stocks out here, this is what we have happening inside the Dow stocks. You have Exxon's up 7 cents, DuPont's up 32, GM's up 19. We got Johnson & Johnson up 12, 3M's up $1.93. You stay right there, folks. We're coming back. Our phone number is 877-927-6648. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at the GLD. So the Spider Gold Shares Trust, folks, okay, Street Tracks Trust. That is up 31 cents. Now, what that has done is this, is that so you had strength that comes in the gold market on February 8th. We did 28 million shares. Followed through on the 11th, 49 million shares. You get up to a high of 120. You go higher, 122 on the 4th, and then we back down. As we back down, the first day we backed down, we back down with 15 million shares. That 15 correlation was going into 28, still light volume. We tested it last week with 6.2, and bottom line, you can test it today. Now what you want to see, if you happen to be a bull in the gold market, is that now you want to see it get up and out of here. XAU. Let's take a look at the XAU, what you have with the XAU. The XAU and the HUI are still in monster ABC structures on the way up. They didn't even come close to, let's see. The XAU, we're at $67.45. It would have to get under 64 to basically turn into a complex ABC. We came down on Wednesday to 66. You tested that Thursday with much lighter volume because we went topside with 51 million, came down with 54, and then tested it with 38. Bottom line, this is on its way back topside at the $73 right now. You're at 67.48. We go to the Gold Bugs Index. We take a look at the Gold Bugs Index. Same setup in the Gold Bugs Index. Monster ABC structure on the way up. What the Gold Bugs Index has done, this also back down with dramatically lighter volume. Gold Bugs Index went topside. You went topside the first day. See, the Gold Bugs Index is really interesting because what happened also is this, folks, is that the Gold Bugs Index was way ahead of the XAU. To show you just how much ahead, because if we go back to February 8th, the Gold Bugs Index was already at 157. And that's when the XAU was starting to break topside. The difference here is that even when we backed down with 33 million shares. That was going into 44 million shares. That was going into 34 million shares, and that was going into 48 million shares. Bottom line is that this also rejected lower price today, and this is back on its way up to the 189 area. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Yeah, hi. Thanks for taking my call.
Sure, how you been, man?
I've been okay. Richemont Mines, because you've been talking about junior gold exploration companies, RIC.
RIC, so Richemont Mines, right?
It's a Quebec-based company.
Yep, let's just see. Okay.
Daily versus the weekly.
So they take in money. They take in $34 million a quarter right now. Mm-hmm. The stock trades at $5.15. The low is $2.27. The high is $5.47. Mm-hmm. And okay, so all their businesses in Ontario and Quebec.
Yeah.
Okay, so we take a look at this. It looks just like many of the others. Strong, broke out. This is an ABC, broke a B point. Let me just see if it had the volume. Okay, so we got 368 with 3 million. A shot on the volume. Let me see what the price was. So 142 would have been is a 368. So you get 220, which gives you 440. Okay, so it already finished one ABC structure on the way up.
Okay.
Let me pull this back.
You notice something? You notice that when it rises, the volume rises, and when it falls on declining volume?
Well, that's what you want to see in a bull market, that's for sure.
Okay.
That's how it works. So, yeah, this is nice. This is a rejected price even last week. Let me put this on a monthly for a second. Mm-hmm. So right now you have, this is pretty cool. Okay, so see, this has happened on a lot of them, folks. This would happen with the XAU and the HUI. They took out their B points with volume on the monthly. That's what it did. 1 second. 8.9 million. Oh, 9.9. It almost did. If you look at the XAU and the HUI, Mike, you'll see it took it out on the monthly, but not this one, okay? But I think this one here looks like it wants to run to 550. It will probably build some cause. I'm sorry?
On a pullback, where would you enter?
On a pullback, which I don't think you're going to get, you just see this even today. You know, it pulled back dramatically lighter volume and rejected 497. Yeah. It would be down at like 441.
441. Okay.
I don't think you're going to see it though. But cooking, brother. Have a great one, man. Have a safe one. Let's go to Rick in Oregon. Hey, Rick, what's going on?
Hey, Tom, thanks for taking my call.
Sure.
I'm trying to follow your pattern of looking at the best of the best. Is there an entry yet at AEM?
So let's take a look. AEM is an eco, folks. This is another gold miner.
I know you're probably getting worried with too many.
No,
people
not
following
really.
it.
No, there's still plenty of bearishness. It's people basically missed the move. So it's pretty cool actually. So AEM, you're at $36. We just went from 21 to 36, which is pretty intense. And look at all of these today. I think you're going to see gold moving this whole week, man. Because what has happened is that the dollar has pulled back, and it wasn't big action in the dollar today. But that's because the European markets were closed with Easter Monday, and it looks to me like that dollar is going to get croaked tomorrow, and gold will probably catch a bid. You know, because realistically, you know, this rejected lower price again today.
Yeah.
You know?
So it could be entered here.
If you enter it here, you got to put a stop right underneath it, you know.
Okay.
Because, you know, you are gunning, which is pretty cool. You're gunning for $39.48. So you still got $3.40 top side. So you could put a stop, you know. Yeah, you could put a stop in the 34.44. Because that's on the short term, that's what you're looking for. On the on the longer term, this already broke out on a weekly and a monthly basis, and on that basis, it's saying it's going to go to, let's see, 13, 34, 44, 45, 40, okay, 34 plus 13, 44, $47. If you take what I'm doing there, Rick, is this. This was in a consolidation, and so the top of that consolidation was 34.78. It had hit it, folks, in February. It hit it again February of 2014, no, 15. It hit it in May of 2015, and then it blew it away in February of 2016 with huge volume. We did 23 million shares versus 11 million versus 14. So as to a price projection, you can take the top of that, which is a consolidation. You take the bottom and just to add 13 points to the top, and that's a price projection.
Okay.
Okay, man.
Thanks very much.
Have a great one, man.
Have a good day.
Have a safe day. You too. You stay right there, folks. We'll come right back. Dow Industrials right now are down, up 19. Nasdaq's off 3. S&Ps are flat. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Right now, you have the Dow up 27, the Nasdaq's down 1, the S&Ps are up 1. You know, folks, if you haven't test drove the gold report, it's a great time to test drive it. You can test drive it 30 days absolutely free. A new edition came out this morning. Just go over to our website at TFNN, go into newsletters, go into investment newsletters. You can test drive it right there, 30 days absolutely free. Let's go into the copper market. We take a look at the HGK6. So, what you have with copper, HGK6. Okay, so what you have with copper is this. Copper's traded at $2.24 a pound. Now, this little baby is building some good cause. You know, this came off the lows. Low that was generating copper was on January 15th. That was down to $1.94 a pound. There's a couple legs up. First leg takes it to 214, which was on February 4th. So it started, the bottom was January 15th, goes up to February 4th, does a pullback to $2 on February 10th, and then just takes off topside. Goes from $2 up to $2.30. And has volume, by the way, all the way up at those levels. Then what do? We consolidate. You know, so as you broke topside, we go topside with 105,000 contracts. We pull back in, and we pull back in with 54,000. What you have happening here is that copper looks like it's going to go make a run to this 243 area. If we put this back, and I put this back in a continuous contract, we put this on a weekly, a 3-year weekly, what you're going to see is that, you know, this certainly can still be a dead cat bounce, but guess what? 260 is game here. You know, this when copper had come down, it had come down hard. It had come down from let me see what I think. Say it was almost $4 here. Yeah, it was 464. Copper went straight down from 464 in 2011, 464 to $2. So big number. Because what has happened is this: if you take a look at a few of the copper stocks out here, if we just go to SCCO. I don't own SCCO right now, but I can tell you that the copper stocks start lifting their head up the last few weeks, and they look like they want higher price. SCCO is a large copper miner, Southern Copper. It's down 16 cents today. You're at 600,000 shares, sideways move really, but the bottom line is that this baby looks like it wants to make a run up to the swing point from October, which is $30.25. You know, Free FCX, you got Freeport, McMoran. That little baby is, you know, had taken off from the bottom of $3.70. That's trading at $10.15 right now. This also is building cause to get up into that swing point of $14.20. Now, you know, Freeport McMoran does have gold, it does have oil, but when you're talking about the ratios, copper is the big ratio. You know, you got when you look at their gross product, their copper brings in $10 billion a year, oil brings in 1.7, gold brings in 1.5, and they take $2 billion in with other byproducts from that mining business. So that also is a copper miner. And inside, even the gold report this week, the copper miners, they were strong. You know, so that's telling me the copper also wants to continue to move higher. We'll get over and let's go take a look at a couple of the NDX stocks, and we'll go right to Apple. Apple came out with new products last week. Didn't do much for the equity, and Apple looks to me, you know, I think as the S&P goes higher, it will suck it up a little bit higher, but it looks to me like Apple's hit its highs. You know, you're off that high of $134. You're 105, which is not a huge amount, by the way. You know, but the way that we came down was pretty dramatic. And Apple, this is the thing that's pretty amazing. Apple, folks, okay, has had no volume at highs. We're talking about almost 4 years. You know, last time that Apple had any volume was when it was $92 in April of 2012. So this baby's been hanging up there, and of course, the longer that you hang at highs, even though it's 30% off its high right now, the more problematic it is and the more distribution happens. And in Apple's case, they do have 5.5 billion shares outstanding, which is just insane. But bottom line is that it's a, you know, it's a monster stock with the monster market cap. Because if you do remember, I believe the last split was pretty dramatic. And right now that market cap stands is it 583 billion? Yeah, big money. Big money. You know, there was an article in the Journal this morning. It was pretty cool about the amount of debt that is out there in the energy business is pushing $3 trillion. So, you know, the more that you hear about that, there's not going to be a problem in that area, folks. There's going to be a problem in that area. You don't get $3 trillion of debt put on any sector, and the sector goes kaput. There's going to be a problem. Inside the article, it had one Fed governor in particular saying, no, they don't see any banks going down. Maybe one bank as an offshoot. The large banks, I don't see any of the large banks going down, because if you look at if you believe what they had inside the Journal, it was that none of the large banks, meaning Citigroup, J.P. Morgan, Bank of America, their exposure was 7 to 10%, where the regionals had some big exposure. Where I was having, and you have to dig further into this, a tough time was like, okay, there's $3 trillion. And out of $3 trillion, you're telling me the large banks only have 7 to 10%. If you remember, during the housing crisis, they claimed forever that they pushed all the paper out, when in fact they pushed most of the paper out, but they were on the hook for a lot of paper also. So that just might be a replay of actually what these big banks are on the hook for. And they're going to get revalued. That debt structure is getting revalued, you know, as we're standing here right today. You know, you're going to see more revaluations come April, because what does happen is at the end of the quarter, you know, the April time frame coming out, the regulators are on the banks are going to be on their clients, and it has to do with what? It has to do with what is the value of your collateral that's in the ground right now. And of course, when you look at it, we've been a long time down at these lower levels. You know, now we're certainly not at the $27 anymore. You're at $39. But what they will do, they will average prices out over the course of time. And I'm not quite sure what that actual average is going to be, but it certainly is not going to be a high average now. Because what's really wild is that when things are going great, it seems that, and banks always do this, they'll average up. Okay, so it's like, oh yeah, everything's going to stay here. And then when things are bad, guess what? They're not going to average like a normal average should be, or a bell curve. What they're going to do is average down. And what does it do? It just basically sends things right down to the floor and puts more pressure on the sector, which puts more selling pressure in the commodity. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is up 8. Nasdaq's down 7. S&Ps are off 1. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over to the transports. So we take a look at the transports. So the Dow transports right now are trading at 7,854. Now, what's pretty cool about the transports, folks, is this. The transports are the first sector that came off the highs. The high in the transports, November of 2014, it was 9,300, 9,310. And what do? Well, they come down fast and furious. They went sideways for about 5 months, and then they came down fast and furious. Went from 93.10, and then we hit a low in January of 6,400. So you're talking about a big hit. You're talking about a 30% hit. Now, what have we done thus far? And this is where it gets really cool. So when we came down, you have 2 separate really nice down drafts out here. You have one big one December, which we came down with 400 million. Then we made a low in January of 468 million. Well, we're going into these areas, and this month's going to be over, and we're going to probably have around 350 million versus 400 versus that 468. So I suspect, number one, can the transports make it up to 8,300? Yeah, they can get up another $500 because that's ice. That's laying at ice. That, however, looks to me like a B to a C of an ABC structure down, that when we get up to those highs, that will take the transports down. The next leg down would take it, probably do pretty intense, man, to like 52.37. That's a big number. And what that would do, because when the transports broke topside in January of 2013, didn't have any juice behind the move, gets higher, then gives it up. So the transports are going to be important to keep your eye on because of the fact that it led the first leg down inside this marketplace. And since then, when you do go back and you take a look at this SPY and the consolidation that we've been in this consolidation now almost 2 years. That consolidation started all the way over, let's put this on a monthly basis, and what you're going to see, we started that consolidation really August of 2014. So we're almost in this thing for 2 years. The highs of this consolidation out here in the SPY's 213, the low is laying out there at 181. So when you put that together with the transports, bottom line, the transports also want lower price. If we go overseas and we take a look at the Asian markets overseas, because Asia was open last night, if we take a look at Shanghai, Shanghai was down 0.2%. Shanghai, we're trading at 29.57, and that backed down with lighter volume. So we back down with 20 billion versus 31 billion. So what is happening even in Shanghai? Shanghai does want higher price, and I expect even, a dead cat bounce in Shanghai. This is what's really going to get wild here. We're at 29.57. A dead cat bounce can get you up to 33.27. And where I'm going with this, this has been a one-way move, since 5,100. This almost looks like the NASDAQ chart in 2000. Because it went that dramatically down. If it went from 5,100, you had volume off its highs, June of 2015, my God, down to 2,600. So, it got cut in half. That got cut in half in 6 months. So right now what you have is a counter trend bounce that's going on, comes up to ICE. Yeah, ICE is easy to get to, too. ICE, 3,300 ICE would be very easy to get to. You stay right there, folks. We'll be coming right back. Dow Industrials right now are up 6. NASDAQ's down 8. S&Ps are off $1.50. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Alex in Newton. Hey, Alex, what's going on, brother?
Hi, Tom. How are you doing?
I'm doing great, man. Yourself?
I'm doing pretty good.
Good, man.
Subscribe for your gold report. I've been following you for a while. The first time I subscribed for it. And what I love about your gold report is that you give us a direction. You give us an overview of the whole market, and you leave final decision to us because you give a lot of ideas. After that, you can choose whatever you want to follow, whatever you don't.
Yeah.
That is great.
Okay, brother.
Thank you.
Have a great one, man. Have a safe one.
Thanks.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night and a great week, folks. Expect to have hope rekindled. Expect your prayers to be answered in wondrous ways. Oh, yeah. Market-wise, let's take a look at it out here. We had the Dow Industrials up 19, NASDAQ down 6, S&P's flat. Gold contract down to $1.90, trading at $1,221 an ounce. Silver up a penny at $15.21 an ounce. Platinum flat at $9.48. Copper flat at $2.24. Oil flat at $39.38. Bottom line, folks, what do you have out here? Flat market, lowest trading volume day of the year. Easter Monday, bottom line, we did 623 million shares versus 887. On the NYSE, you did 1.3 billion versus 1.5 in the NASDAQ composite. What I do expect you're going to see, Europe will be open tomorrow morning. You're going to see a lot more action, a lot more volatility. Gold contract trading at $1221.70. The silver's at $1523. Bonds, the 10-year note up 2 ticks, 129.09. 30-year bond up 7 ticks, 163.08. And King dollar down 208 ticks at 95.96. The euro is up 32 at 111, and the yen is trading at 113.42. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? SPYs today did 59 million, anemic volume, but guess what? They went up 12 cents anyway. Bottom line, the SPYs want to get up and into the swing highs that were out there from December, which is the 211 price area. If we take a look at the cash S&P, the cash S&P, folks, has a ABC structure that it's on right now. The 1-to-1 ABC structure is 2,087. Right now, you're trading at 2,036. Bottom line, you are going up higher. Volume is contracting, so what that's saying is that once we finish this ABC structure off, I suspect we're going to go south once again, and the consolidation that we're in right now is pretty intense, meaning the lows to the highs. Gold contract, what do we have with gold? Gold contract out here today, trading from a price point. The low was 1207. We're at 1221. It rejected lower price, had lighter volume, got into not the low of where we broke out from. When this broke out, folks, on February 11th, gold went from 1198 to 1264. We did 333,000 contracts going topside. Last Wednesday, we came down with 77,000 contracts. We tested that with 62,000, rejected lower price. Now you're back right inside the higher range once again. As soon as you got back inside the 1217, guess what? It's going to go topside, go after this 1287. If you go to the XAU, the HUI, what you have inside the XAU and the HUI out here today is this. They both, first off, are in monthly ABC structures on the way up. They're monsters, too. That being said, what you have is that the XAU came down to 65.93 today. Said, see ya, don't want to be ya. That sets up, we're going after the 73.81. Gold Bugs Index, same type of setup inside the Gold Bugs Index. What we did with the Gold Bugs Index, that came down to a price point of 168.05. Rejected lower price. I expect we're going to have lighter volume. I don't get that till about 8 o'clock tonight. We're at 170.83. That's going to be going after the 189.13. And as I said a little bit earlier, both the XAU and the HUI are in monster monthly ABC structures topside. We go and we take a look at the notes. 10-year notes out here, they failed on price and volume once again. This has failed. This has been the 7th day in a row. They started failing March 17th. Bottom line, they can't hold price. What I expect you're going to see out here tomorrow is that tomorrow they're going to go, the notes will go after the 128.01, and the notes are still in a complex ABC down. When we broke down on March 10th, we went from a price point of 129.12 to 128.15, broke the B point, broke it with volume. That sets up a 126 in the notes. And what's crucial to understand here is this. So check it out. What you want to coordinate, and this would just be harmony in the marketplace, is that if, in fact, this S&P wants to finish off an ABC structure on the way up, which I think it does, and it is lighter volume, as the S&P goes up, you're going to see, and And I suspect what we're going to have actually is that it's going to, at some point, whether it's the next few days, it's going to go up with wide price spread and accelerated volume, but not enough volume to basically kill the way down. And this is why. Because the 10-year, folks, is 3 points away from the 126. That's a long way for the 10-year to go down. And the only thing that I can think of at this point that would make it go down and go down pretty quick would be the point that the S&P goes topside and goes topside very quick. So that correlation is something you want to keep your head wrapped around. The oil market, let's go take a look at the oil market right now. Oil is trading at a price point of $39.38. We went sideways out here today, 282,000 contracts. That's light volume. This oil contract number one, I expect is going to go after the December 18th level. That high is $42.49. Right now we're at $39. What I expect you're going to see, however, is that is going to run up to the $46 level. The $46 to $47 level, actually $46 level in this contract is ice. That, baby, if you see oil run up to that level, what is that going to do? That's going to pull up all those XAU, HUI stocks. And King Dollar, what do we have with King Dollar? Okay, so King Dollar, folks, went topside last week. Each and every day as it's going topside, what is happening? The volume is dramatically decreasing and contracting. This baby goes south today. Now, as it goes south, it has light volume also. He only did 10,000 contracts. That's nothing, okay? Bottom line, you know, it had gone up on 13,000. It had gone up on 14,000. What I do expect you're going to see out here tomorrow morning is this. You're going to see an expansion of volume on the dollar. Dollar's going to start making its way to the $94.60, which is the swing low that was generated March 18th. And if we get volume there, it's going to be easy to do that because it was only 20,000 contracts. That's an ABC structure down that sets up a 92.50 price projection, which is, by the way, the low of August 24th. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You talk about fighting over land. There's a lot of it going on lately. So this just came across the headlines. Plaza Hotel auction said canceled as lenders grant an extension. Next month's auction for the Plaza Hotel in Manhattan was canceled after holders of the mortgage reached a deal to give the borrowers more time to sell the property and pay back the loan. The hotel's ownership has been in limbo for 2 years. Billionaire brothers David and Simon Rubin hold the mortgage on the five-star hotel and it's scheduled a foreclosure for April 26th, according to the person asked not to be named because the deal is private. The Rubins bought the loan from the Bank of China after a default by the property's current majority owner, Sarah Parawar. Last year, Sarah is controlled by Subrata Roy, who was imprisoned in India in the early 2014 for defrauding investors. A spokesman for the Rubin brothers didn't immediately respond to an email request for comment. The Chateau-like plaza located at the corner of 5th and Central Ave has changed owners many times. It really has. It's pretty amazing how many times it's changed owners, actually. Presidential candidate Donald Trump bought the plaza in 1988, married his second wife, Mala Maples there. Trump sold it to a group including Prince bin Tal from Saudi Arabia, and then sold it to another group in Israel, which converted the hotel rooms to condominiums. For sale with the plaza's hotel rooms, its restaurant retail space, according to the people with the knowledge of the matter, was to be sold as a package with the Dream Downtown Hotel. The two hotels serve as collateral for the Bank of China loan and are cross-collateralized with the Grosvenor House and Hotel in London. The Dream Hotel is owned by Shahar Roy. The combined mortgages on the hotel are about $500 million. Yeah. So what you have here, no doubt, and this is smart by the holders to basically cancel that. So the squeeze was on, but this is going to be, when you look at a mortgage of $500 million, this is the plaza is going to go for more than $500 million. It's, as they just said there, so two hotels. So the ownership inside is the hotel rooms, its restaurant and retail space. That's worth more than $500 million. And so what does happen in a situation like that, it makes much more sense that you don't go in on them. I suspect what that was all about is that they thought they could basically have them pay it off. And you know what? It's not going to happen at this point. If we go from that to the takeover bid that's happening right now, you get Starwood's hotel this morning. They received a higher offer for their brand hotels, which is the Starwood's Hotel Resorts. And this is from the Ambang Insurance Group in China. So they're offering $14 billion, which is much higher than the offer by Marriott, folks, okay? I suspect what we're going to see is that Ambang more than likely is going to be the winner here on this whole deal. Because what you do have is that, so this takeover battle pits the 12-year-old Chinese firm with aggressive ambitions to expand outside of China against the 89-year-old company that's one of the pioneers in the hotel business. Marriott on Monday reaffirmed its commitment to buying Starwood, which it wants for its loyal pool of guests and commitment. But what you have is this. So picture, the Marriott bid is only $20 in cash versus this bid here, I believe that even before they started this, it was 78 in cash. Let me see what it is now. Yeah, now they're up to 82.75 in cash. Now, this press release here says that Starwood said it's in negotiation with the Anbang Group after receiving a non-binding offer of $82.75 cash. The non-binding offer, I suspect by tomorrow morning, will be binding. The reason I'm saying that is that the last offer, which was still much higher than the Marriott offer, the first day it was out there, it was non-binding. They just get the lawyers together, then the deal gets bound. Then they have to come up with it if they want to close. The real intriguing part is going to be like how much further is Marriott going to jump through the hoops. Now, this is what the difference is. Now, watch this. I'm going to go over and look at the Marriott because I believe inside the NDX 100, what you're going to see here is that Marriott was the biggest mover today inside the NDX 100. Now, the reason being, Marriott was up $2.70. And why would that be up? That is up, folks, because of the context that they're using their stock in order to buy the company. And that's why the risk is absolutely huge for Starwood. Starwood's not going to take stock. Why would you take $20 in cash and the rest of it in stock when the stock can fluctuate each and every day versus do whatever you want with the cash? You know, if we turn around and we put Marriott on a week, let's put it on a weekly, because this looks to me like bottom line Marriott wants lower price. You know, it has a high volume swing low out here, laying at $56. You know, so you can see the gist of it. Bottom line, they're using that as currency, which is a great way to do it. If in fact, you know, the target that you're trying to take over will in fact take a currency other than cash, and in this particular case, that currency is Marriott stock. What also does happen is this. Now, this is where this is going to get intriguing. You know, inside a couple of the press releases, it says, "Well, can it pass regulators?" It's going to pass regulators. This is you're talking only a hotel chain. You're talking about a piece of real estate that's not that huge in the context of how much real estate is out there. That's how this whole thing is shaken out. Let's go over and take a look at Yahoo. Now, we haven't looked at Yahoo for a while. Yahoo right now, it's trading at the top of its range. We're at $35.23. This baby, when I say top of its range, I'm talking about from last year, August of last year. This thing's going to have a hard time getting through. I suspect it's going to try to run to 41, but it's going to have a hard time getting through there. And what I do expect you're going to see is that, you know, bottom line, this is coming to the end. Let's see, Yahoo sale process said to be in the middle of the first round. Yeah, so this just get reported? Yeah, 11:20 today. We're going to see, this is going to be really wild, watching, you know, what are the pieces of Yahoo going to be and how are they going to get basically broken up? Because that's what it looks like. And I guess it really comes down to how can Yahoo make money on advertising? Because there's no doubt that what has happened is that you get Google taking all the bread in, Facebook taking all the bread in, and Twitter can't seems how to. Twitter takes in a huge amount of money, by the way, but it's like I don't even know how they take in that much money. They're certainly not growing, you know. And it's like, okay, when you tweet, and we have, I think it's some outrageous amount of followers on Twitter, but I just still can't figure out how no one looks at ads on Twitter. I mean, it just doesn't happen. This is Tom O'Brien. This is TFNN. You stay right there, folks. You'll be coming right back. Dow Industrials finished up 19, NASDAQ down 6, S&P's flat. We're going to be right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up at 19, Nasdaq was down 6, S&Ps out there were flat. And, you know, if we go through, you got to check this out, folks. If you come over to our website at TFNN, you're going to see on the right-hand side, you can hit the Everbank banner. And if you have extra cash laying around that are in CDs, this is a great way that, number one, you have your cash protected, 100% of the principal. That being said, that you also get an upside inside this 5-year commodity market-safe solution CD. And specifically what I mean by that is this, is that, so picture how this works. It's pretty cool. Inside the CD, let me get exactly what they have. They have, okay, so we'll look at my commodity page here. You have gold, silver, soybeans, corn, sugar, copper, and nickel. Now, what that means is this, is that the closing date on this, I believe, is going to be April, let's see. I'm going to say it's April 15th or 16th. The initial value date is the 21st, but I believe that you have to get the account open before that. I know you have to get it open before that. Here it is. The funding deadline is April 14th. The issue date is going to be the 25th. Now, the way this works is this, is that inside this basket, inside the CD, you are going to have all those commodities. Now, if those commodities happen to go up in price, and picture's a 5-year CD, if they go up in price, each year that they're going to take the price of each one of those commodities on a certain date, and it's 1 year each time from the initial date. So, you know, the first year, 1 year from that is going to be the initial pricing date will be April 21st. So each year after that, 1 year, 365 days later, that's when the initial pricing date will be. So let's picture that you get these commodities, whether they're going up or down, they take that pricing structure. You get up to 70% of the upthrust. Let's say if it goes up more than that, you'll still only get 70% of that move. You get, and let's say some go up and some go down. That averages out, okay? End of the year, you start again. The cool thing about this goes like this, is that because rates are so low, and when I say low, if we go over to the I'll just go to the 5-year right now. So the 5-year Treasury rate right now is 1.362%. Now the Treasuries, no doubt, that is the safest trade you could have, U.S. Treasuries. You know, and we know nothing is safe in the marketplace, but that would be the safest trade you had. You would get paid 1.36% each year on a 5-year Treasury. Now let's go back to the Everbank CD. Inside that Everbank CD, you are going to get paid the upside of all those commodities. Now let's picture if they go up. Great, you're going to make money. What happens if they go down? Well, if they go down, folks, your principal is protected 100%. So watch how this goes. This is the way that I look at this thing when I'm looking at this, because this is a great product. If you take this and we just do the numbers on it for a second. So let's say that you get, I don't know, 25 grand times 1.36%. So that's $340. And let's say you got that every year. So 340 times 5 is $1,700. So the way I kind of look at that investment is this, is that I says, okay, you're putting money away for 5 years. If you bought a Treasury, you're going to get an additional $1,700. Do you want to take that risk, or do you want to take the risk that gold, silver, let me get all of these again here, because I like how this is spread out too. So gold, silver, soybeans, corn, sugar, copper, and nickel, if they're going to be going up on price, I think the odds are pretty cool. And this is why, well, you know I'm a commodity bull right now anyway. Bottom line is that when we take a look at the market from 2000, in oil, thanks Mike, in oil. When you take a look at the market from 2000, the commodity bull really started in 2002, ran to 2006, got crushed, and 2007, ran again to 2011, got crushed from 2011 to 2016. But yeah, bottom line, the way many of these equities are moving again, this game is on. And it's not only on because when you go back over to the dollar, it looks to me that the dollar also wants to go to lower price. So check it out on the front page of TFNN. You can hit everbank.com. You can also give them a call at 855-750-4051 and just ask them about the Market Safe CD. Real easy to get up and going. And of course, man, Mr. Chris Gaffney, I'm going to have him on another couple weeks. When we talk about interest rates, what you're going to see, WIRP, is this. If you're looking at my Bloomberg screen right now, the odds, and this is the probable odds of a hike of how traders are trading the Fed funds futures. The probable odds of a hike in April are now at 6%. The probable odds of a hike in June 15th, are 36%. In July 27th, 47%. September 21st, 59%. November, 64%. December, 72%. And next February, 75%. I suspect the April is out. The reason that the April's out, too, by the way, folks, okay, is that there's no press conference. They're not going to raise rates without a press conference. They could change that, but I don't see it. What is intriguing here is that in the June area, they're still saying they're only at 36%. That's pretty low. Now, watch how this goes, because this is where it's really wild. So picture, we have November, the elections are, right? July, 47%. September, 59%. November, 64%. We're going to be going into that election, well, if we look at the Fed funds rate right now, with probabilities high, that would be going up. If we looked at these probabilities, which I did in January, guess what? The April hike was over 50% in January. It was only when they actually come out and they balked going higher that those rates went down. Well, the probability of those rates going up went down dramatically. You know, so those they change very quickly, and they change very quickly after the Fed comes out with an announcement, of course. This is Tom O'Brien. This is TFNN. You stay right there. We'll be coming right back. Now, don't forget, folks, every trading day, you can get us right on your cell phone, too. TFNN.com. Hit Tiger TV. You're going to get the audio. You're going to get the video. You stay right there. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Some of the high volume stocks in this low volume market. So today, folks, was the lowest volume day of 2016. And, what is intriguing is that most of the time, the close in Europe really doesn't affect us that much. But I suspect that this is turning much more into a one-world economy where money moves across lines so quickly and so easy that, guess what? Each and every day makes a big difference what's going on in Europe, what's going on in Asia. Now, Asia was open last night. So inside the NYSE today, we did 706 million shares, light volume extraordinaire. Inside the NASDAQ Composite, we did 1.385 billion. That being said and done, let's go over to Asia. We'll take a look at Asia. Asia is going to be opening in about 5 hours, let's see. Yeah, about 5 hours. If we go to the Hang Seng first, Hang Seng was down 1.3% last night, which is 269 points. We're trading at the 20,300. So we back down with 1.5 billion. You're going into 2 billion, and you're going to 2.5. Okay, so you did have the Hang Seng expand as it moved off the highs from last week, but that's still not enough volume to knock it down because that's going into strength. It is going in with lighter volume, and it looks to me like that still is going to try to get into the 21,300 level. Doesn't have to get up to a swing point, but 21,300 is game. So that's 1,000 points higher than we are right now. We go take a look at the Shanghai and China. What you have with the Shanghai, this is a indice that got absolutely smoked. China came down 21 bucks last night. When I say smoked, meaning the last year and a half. That also, came down with light volume. Last night we did 20 billion shares. I mean, they do billions all the time, which is a trip. But that 20 billion is going to 31 billion, and has a little swing high out here of 35. So it looks like Shanghai also wants to run up to the 3,200 level, which would be quite a move, by the way. But that 3,200 level inside the Shanghai still would only give it a dead cat bounce. Now we go over to the FTSE in the UK, and this will get action, 4 o'clock in the morning our time. And I believe what's also going on this week is that the numbers that will catch up with us because Europe does daylight saving time, I believe, probably sometime this week. So the clock has been different the last couple weeks since we went into daylight savings. So the FTSE came down with the 625 million shares. That was going into 1 billion. Germany went daylight savings Sunday. Oh, cool. Okay, so it's going to be opened 1 hour earlier tonight. So bottom line is that with FTSE first off, that pullback with lighter volume, that's saying that also wants higher price. Now, the FTSE, folks, is what you want to keep your eye on, and this is why. The FTSE's been at the same place since March 3rd. March 3rd, we're at 61.94. Well, guess what? We're at 61.06. And what does that mean? Well, the cool thing is this. I expect we're going to see the FTSE break topside, and run up to these highs that were generated out here in November and December. Okay, why? Because the setup is the same kind of like in the S&P. It doesn't have enough volume, but guess what? It wants to climb up to that level. Now, that being said, which is cool, and that's why we want to watch it so closely, if it fails, well, guess what? That'll bring the higher probability that our own S&P will fail. And that's on the top side. Now, on the low side, if it does go after, there's a lowest swing point of 6,036, which if it goes after that and breaks it, well, guess what? That sets up that our own S&P probably won't make it. So it's pretty cool watching this because What you do have is this. You have a good 6 hours, 4 to 6 hours, watching the FTSE like, okay, if this breaks topside, guess what? The probability is much higher that we'll go on topside. If we go over to the DAX in Germany, we take a look at the DAX in Germany, it's the same setup. What the differences in the DAX in Germany is that the retracement hasn't been as large. The DAX in Germany high is 11,430. Right now we're only 98.51. But DAX in Germany also looks like it wants higher price. I suspect that all the DAX in Germany will be able to do, however, is fill the gap left over from the December 30th downdraft. Now, what's cool about this whole deal is that if we go take a look at our own cash S&P again, what you're going to see is that the extension from the low was fast and furious. We were at 1810 February 11th. We're at 2037 right now. The high out here is only 2116. So we backed down last week, took back a little today. You're coming into window dressing. You're coming into the end of the month, beginning of the month. The whole baby is set up to drag this market higher, to get everyone bullish, and then guess what? Ba-boom, pull the plug once again. Because the consolidation that is out here is a very large consolidation. If we pull this back, you take a look at this on a 4-year weekly, what you're going to see is that the top of this consolidation inside the SPY is this SPX rather is 2134, and the bottom is 1820. You're talking about 300 points, which equals 3,000 Dow points. That is a big number, folks. That number, by the way, when you do take a look at it on a much longer basis, it also sets up that we haven't really moved in the marketplace since October of 2014. We're laying right where we were laid out here right at the end of October. At the end of October, we're at 2034. And right now, you're 2037. So that's, if you're in the marketplace, as we get up to those highs, get your stops in. That's the bottom line. Because what you don't want to happen is that we've been down to those lows 3 separate times since October of 2014. October 2014 was the first time down. August 2015 was the next time down. January 2016, that was the third time down. Each and every time, we know what we have, right? You have an expansion of volume, you have the wide price spread, you have all of the above. What you haven't seen, and this is pretty cool, so I never talked about this. What you haven't seen, let's look at this for a second. We talk wide price spread also gives you an identification as to where this market wants to go. You don't have one bar from November of 2014 with wide price spread trying to break topside. Each and every bar, if we look at this weekly, each and every one of them, folks, are nasty on the way down. So that says quite a bit about where the force is inside the marketplace. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 19. NASDAQ down 6. S&P's flat. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go over and we take a look at Microsoft, MSFT. What we have out here, Microsoft right now is trading at $53.54. And what is going to be really interesting here to watch how this whole thing shakes out inside virtual reality. The first Oculus Rift virtual reality headsets began shipping Monday, 3.5 years after it was launched as a Kickstarter project. And I know, virtual reality, you talk about going fast and furious. And Microsoft has one themselves, so it's going to be interesting to see if, in fact, this is going to be a big product that, in fact, is going to basically kickstart quite a few of these companies. The way Microsoft is set up right now, let's just take a look at this. So on a monthly basis, let's see, we did 857 million. Unbelievable, yeah. On a monthly basis, this is an ABC up, man. Check this out. This is intense. So your A point, this will be a long term, but your A point is $26. Your B point is 50. So you're talking 24 bucks, which gives you 64. Oh, so it's interesting. It's not that it's that much more. What's 64 bucks? It's a monthly $64 A to B equals C to D. So we'll see where that shakes out. If we go over to Walmart, of course, is the equity that has been having a huge, tough time inside the Dow, sucking the Dow down. And what you have out here, nothing has changed out here. Walmart has gone from $90 January straight down to 56. And this baby here looks to me like it's going to be a monster failure. And when I say a monster failure, this is what you have. We're at $68.12. Now, I think this can get to 70 bucks. But if you want to see the anemic volume as it gets into here, pure distribution, Walmart came down on 70 million shares, August of 2015. September it came down, no, July. What do I got this on, a weekly? Oh, I got it on a weekly. 1 second, sorry. Yeah, we can do the weekly. So the second week of August, we came down on 50 million shares of 2015. Third week of August, came down 79 million shares. Second week of October, we come down 167 million shares. Now watch how this came up into the same area. We come up with 52 million shares, 49 million shares, 57 million shares, 29 million. So the correlation is 29 million versus 57 from the prior week versus 167 and 70. That's a nice setup. I'd still wait for it to get a little bit higher. Wait for that S&P to kick in, meaning that ABC structure. But the way this is set up right now is that Walmart wants to run into this $47 area. And I suspect a lot of it probably has to do with not people so much going to Walmart. I suspect they're still going there. But what you do have is that the pay rates in China are going up. And so that deflation that we've been able to take advantage of for 15, 20 years right now, that slowly is coming down. They'll find other places to make inexpensive products, but it's going to be really hard to find another China, excuse me, folks, that will keep inflation down and keep goods so inexpensive for such a long period of time. What will the next big deal out here, no doubt, is going to be, the amount of robotics that are out there that unfortunately are going to put a lot of other people out of work. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking. I'm right back here tomorrow morning, 8 o'clock. Go get them, folks.